130.20 or 130.30 is a level that we have mentioned the most. If you can see based on the price action, this was the support. And then price traded below this level briefly and then went back up again, signal to you there is a lot of buying interest. But now we have broken the support convincingly, and we would expect the previous support to now turn into the current resistance. While we have identified the top side, if the down move should continue, these are the few resistance levels. What about the bottom? So the first support, very obvious, sits at 129.30.40. In fact, you can see there are already buying interest coming in at this level. There could be some take profit. So, but how do we identify 129.30.40 as your significant support level? Look back at your previous price action. You can see this is your previous resistance, tested one time, and then second time testing this level, reversed and stalled and reversed on the downside. But once it has broken, now we should find the previous resistance to turn as a support level. S2 sits at 129 figure 10, which is also your resistance turn support. So these are your support and resistance levels. So it is very important to see how the price action unfolds at this area, which will tell you the market supply and demand at the current market. Next, we will continue with the fundamental analysis. In today's news, we see the dollar is going up on continued worries about the growth of the world's major economies, with the euro falling below the 130 level. So the dollar found support versus most major rivals other than the fellow safe haven Japanese yen. This is after a downbeat Chinese manufacturing gauge and Eurozone PMI underlying worries about global growth prospects. So we have a chief economist saying that the data are in line with a 0.6% third quarter contraction in Eurozone GDP, which would push the region back into the technical recession and mark the toughest quarter in more than 3 years. So therefore, if economic growth does not improve soon, we would expect to see a drop in the euro while investors flock to the safe haven assets such as the US dollar. In Europe, the focus remains on the Spanish debt situation. First, we have the German 10-year government bonds advance for a fourth day, the longest run of gains this month, as Spain prepares for the biggest bond offering since March. So this is reflective of the increasing demand of the Eurozone, Euro area's safest assets. We have the strategists at Commerzbank AG in London saying there is a risk the Spanish auction may disappoint. So the ECB is prepared to lend assistance to Spain, but the Spanish government would have to accept austerity conditions as part of the deal. So we'll continue worried the Spanish Prime Minister would try to solve their debt situation by rejecting ECB assistance and raising debt on their own. If he does so, Spanish bond yields go up, it would exert bearish pressure on the euro. Last but not least, in the US, prominent Federal Reserve member has spoken out against the decision to launch QE3. So, Federal Reserve Bank of Dallas President Richard Fisher said the central bank's third round of bond purchases will probably fail to create jobs while risking higher inflation. So Fisher, who doesn't vote on monetary policy this year, opposed the Federal Open Market Committee FOMC decision last week to expand its holdings of long-term bonds with open-ended purchases of 40 billion of mortgage debt every month in a new round of quantitative easing. However, some economists, including Nobel Prize winner, have said tolerating higher inflation could lead to an acceleration in US growth. So with even the economists disagreeing on whether QE3 can help to stabilize the economy and create jobs, everyone is waiting to see what will be effects of this latest round of QE. So far, global markets have been retracing the initial gains after the QE3 announcement, and with bearish economic data coming out from Europe and China, fundamentally we remain cautious on the euro-dollar. Last but not least, let's take a look on the risk analysis. So you have to bear in mind what are the economic data releases which could pose a short-term risk especially during our trading session. So short-term risk simply means some irregular volatility in the market. So at 8:30 p.m. we have a news which of high importance, which is on unemployment claims. So unemployment claims generally viewed as the lagging indicator, but the number of unemployed people is an important signal of overall economic health. Consumer spending is highly correlated with labor market condition, and in this case, if the actual claims are less than expected, we would expect a good sign for the dollar. And at 9 p.m. Singapore time, there is another news on the PMI. PMI is a leading indicator of economic health, as how the data unfolds give us an idea how business react to the market conditions. So if the actual index is better than 51.6, we would expect it would be good for the dollar. So at 9:30 p.m. Singapore time, we have FOMC member Lockhart speaking with the speech titled Workforce Development. And please take note, at 10 p.m. Singapore time, there will be a release on the Philly Fed Manufacturing Index. So this is high importance news, and it's a leading indicator of the economic health as well, because business changes in their sentiment can be an early sign of future economic activity, such as spending, hiring, and investment. Therefore, if the actual result turns out to be better than expected, we would expect that it will be good for the currency as well. So that's all for the FX in sum for today. We will continue with TWC very soon, and thank you very much.